Hey, what's up, y'all? What's going on out there in the world, ladies and gentlemen, men and women, males and females? Welcome back. Um, Subscribe to the channel, like the video, share the video so the notifications can accelerate. I want to apologize to the people that been following me on this page, and I haven't been posting about stocks, ETFs, cryptocurrencies, and none of that. But I had enough videos for y'all to watch to at least get a great concept and learn how the process works. But we in the new year. I hope everybody brung in the new year safe and responsibly, and have some big goals planned this year to elevate in life. I have a link at the bottom so y'all can, in the description, so y'all can click in and be able to open up your investment account on Webull. Also Robinhood. Rather, if you want to start with Robinhood, is an easy platform for newbies to start and subscribe to and actually save money in as well. It's an easy way to save money in there. As far as Webull, that's more of an advanced platform to go on, and if you good with charts and things of that nature, and more of the fundamentals when it comes to the news, and hearing what people saying, and being very prepared for the stock splits, like for 1 to 10 or 10 to 1. A lot of people got caught up in AMC. It was a stock split. Many people, such as myself, I had about 500. It was about 480 actually. It was 480 shares. So a lot of people, lost a lot of money for that. And then they went low. They started off low with the stock, pretty much. So just to get a better recollection on what I just indicated, because a lot of people may not understand. When it comes to a stock split, a reverse stock split is pretty much when you own shares. For instance, like I had 500 shares or whatnot, so it's pretty much a 10 for 1. It could be a 10 for 1, and in most cases it could be a 1 for 10. These are splits, and then these is reverse splits. Okay, so they'll give me 1 share for 10 of mine. So they'll take 10 of my shares. They'll take 10 of my shares and make it into 1. And that's what they did. And instead of me having 500 shares, I'll have possibly, I'll say, 60 or something like that. 50 or something like that. That's how they do it. So a lot of people lost money that way. And I want to educate people on understanding the difference of how this stuff works and being prepared for it. To be able to sell these shares before this takes its place, before you lose out. You can even gain in most cases, if it's a 10 for 1. So for instance, if they take 1 of your shares and break it into 10, for those who care about having a multiple amount of shares. But we want to start it off by looking into the fundamentals of the shares, of the stocks. Download Yahoo Finance. You want to look into the income statements, the balance sheets, and the cash flow. You want to look into the 5-year period of the stock and making sure it's growing from that time period. You want to look into the segments. If you don't know what the segments is, for those, the people in the back who, the segments is pretty much, if you're going to McDonald's, the fries is selling more than the cheeseburgers. So you want to see what sectors is selling the most. And in most cases, if that's, for instance, if they not sell, let's say for example, if they don't sell French fries no more, that whole stock can fall because of what the segment that was making the most money. So for instance, Apple, the phones is making the most money more than the computers. Those segments is selling. So Apple is going to always be on top because of their phones specifically in general. So you want to be highly prepared of segments. You want to look at the health of a business, whatever you're looking to invest in. You want to look up the health of it. Then that's considered the fundamentals. After that, after the fundamentals, you want to look at the technical analysis. You want to see the history of the stock, rather the resistance and the support level. You want to see the ceiling of it, the highest it was and the lowest it was within the past 5-year period. And in most cases, a lot of people like to just jump into something just to say that they own it, but you don't want to go about it that way. You want to definitely go about it in a way that you just building your buying power throughout the process. It could take a couple years, but you want to build your buying power. And then once pretty much a drought hit, once actually a recession hit, the depression hit, that's when everything dropped down like it recently did, pretty much past the year 2022. You know, when that first war took its place. When that first war took its place, everything was just dropping. And you want to be able to invest once everything hit a support level, and then just hold it into the resistance level. All right, so that's what we want to focus on. We want to, number one, focus on the fundamentals, then the technical analysis, building our buying power. Once you get the basis of that, everything else will fall in its place. I'll come back with a new video discussing the wheel strategy. The wheel strategy is very important. It's a win-win. It's a win-win matter when you're doing the wheel strategy. You can make a lot of money. For instance, like holding your money into a bank, they give you approximately 1%, 2%, if so, you know, just by having your money held in there. When you're doing a wheel strategy, you ain't doing nothing but collecting. You're collecting premiums. So the premium could be anywhere from $5 to, you know, 25 to 50, you know, depending on what you're investing in. But the whole point of the wheel strategy is to collect premiums, and that's better than gaining the interest that the bank giving you just by collecting the premiums. But that's going to be for another video. I'm going to show y'all the ropes on that one, and that way we could build wealth for 2024 on up. Okay, keeping a positive insight on everything. But the number one rule is to build your buying power. You know, take away, you know, bills and habits that you don't need in your life, just so you can have the income. And then you want to be able to have money to attain, sustain, maintain. All right. So peace and love. I'm glad to be back on this channel talking to y'all about it, because I wasn't at a place approximately, I'll say, last year to do so emotionally. I wasn't at a place to do so, so I'm back now, and I'm glad that y'all with me. Subscribe to the channel if you haven't, and I'll be coming back to y'all with more. Peace and love, your boy.